What's up YouTube, it's Louis here, I hope you're all well. We're taking a look at Quant today on the daily time frame. We almost hit 200 likes again on the video, so I do ask if we could really push for that. It does help with the algorithm, as well as helping us achieve the 4K subscriber goal. Today I will be doing a giveaway on my Twitter, Louis_crypto. I will be giving away a free course of mine that will teach you from zero knowledge into becoming a self-sufficient trader. You just need to put the work in and dedicate yourself and be consistent with it. So guys, let's dive into Quant on the weekly time frame. After this bullish cross had formed, this is what we were expecting, a retest of it after running into a very key resistance, one that we had, a line that we had from last year all the way back from December, this head and shoulders pattern, which no one wanted to believe the target of around $70. Once we got down to $70 after this initial dump over here, we had a further target at 50. Yes, we did go below 50, but swiftly reclaiming the old $50 support we had here and previously over here as resistance and support and very key support there. We reclaimed it, confirmed its support again, in line with the 200 weekly EMA. I remember telling you guys, wow, this is the first time the 200 weekly EMA has ever appeared for Quant. So as technically, as long as you're above it, Quant is weekly bullish. So that means for months ahead, we should be going up. Wow, interesting, because that was June and we're 5 months, well, coming up to 5 months now after that. So amazing to see that everything's been playing out nicely. The fact that we're above these weekly 20 and 50 means that in the short term, this is what we should be expecting in the coming weeks and months. We should be expecting further upside. Just now, because we've run into this key resistance, what we are anticipating is the retest of this bullish cross, something that we have not seen yet. And in the past, you do always retest it. We can see once this bullish cross had formed, you'd come back down to it. You always follow these EMAs, and at the moment, since actually getting above it, you have not done so. Even when you lose the EMAs, you go below it, you retest it as resistance. You form the bearish cross. Just before the bearish cross, you retest it as resistance before breaking the low. So now we need to see it confirm the support to get that push. That's how we're going to continue. We need to fall back to key support. Technically, we are in that because this is the golden pocket. And as long as we're above the golden pocket, the lowest point actually being as low as $120. Technically, I'm going to actually bring this gold box a little bit down to $120. Let's get it to 120 right there. And as long as you're holding above $120, then chances are Quant is going to head to 860, 1.2k and 2k. And I had a lot of people, and we discussed it in the last Quant update, discussing how I still believe Quant will be at higher price targets. It's just for me in the coming up cycle, that's where I'm going to be taking profits in and around this area. As if you were buying in from where we were calling down at 50 all the way until 100, where is 100? Around here. Then how could you give up on such gains when you're up here? 4,000%. Even down here at 800, you're already making a 1,600% gain. If you were buying it as low as down there, of course, from current price is not as much, 400% and 1,000%. But yeah. Again, in the future, we do believe this target is going to be met. I'm just not too certain. Of course, I'm not going to get overexcited. I understand the fundamental side. Yes, I do believe Quant will eventually be up here one day. It's just in this next leg up, I don't think so. Because when you meet these targets, they are key resistances. So it means that you need a big rejection. And this is the weekly time frame. So that means for months and months and months and months, you're going to get rejected. Okay, so yeah, just understand that. As I'll show you here, from the high to the low. You ran into the, well, almost in the 2.272. You basically got to the 2 target, went above it and lost it. Once you lost it, that was when you started going down for months and months and months, because these were key resistances. Yes, here in this cycle, the first one, or the second one, yeah. First, then dump, and first, yeah, second one actually. This will be the third one, third wave at least. A third wave up. In the second wave up, you stalled around the 1 target from January all the way until the breakout here June. So you're stuck here for 6 months. So you can see once you do eventually meet these targets, which will be up here, there's not going to be much movement. It's going to give you time to re-enter or to accumulate more. So yeah, and as we know, as the bull markets go on, it's diminishing returns. So don't expect that 2.272 in this run up. We could be seeing that. I'm not focused on that simply because in this last run up, especially for Bitcoin, the double top which we saw at 65k and 69k was the 1618, and after we dumped all the way back down to the previous high of 20k. That's for Bitcoin. So yeah, could even be seeing that for Quant going forward. Once you do eventually come up to here, it could be that we dump back down to here and then eventually head up to these targets. But that is going to take years, guys. So yeah, me personally, I'm looking at these, the one targets, at least in the short term. Going back to the daily time frame, we've already made updates on on my Twitter channel today. Earlier today, made an update quickly on all the cryptos. We were essentially saying that with Bitcoin forming the daily bullish cross, it means that we should see all cryptos pumping, and we are seeing Quant also doing that. But without Quant reclaiming $168 on the daily time frame. So if we're seeing Quant at $169 beyond midnight tonight, for me, midnight, GMT, Greenwich Mean Time, that is my daily close because the clocks went back 1 hour. So for you guys, that might be completely different. But for me, in 8.5 hours, in 8 hours, 40 minutes, the daily close will happen at midnight. And so if we are at $169 at midnight, then you've invalidated this M pattern or this descending triangle target down to $134. If we were to fail to close above this, if we were to fail to close a daily candle above $168, then this is where we do still anticipate further downside to this 55 EMA. Technically, you should go to the target. What might not allow you to go to the target is the 55 EMA. So let's say you were in this sell trade at the moment and you are at break even. If it closes above 168, then you know this trade is not going down there, or the price is not going down there. If we're not seeing price above 168, let's just say 169, then we're going to continue to the target at 134. However, although let's say 135 is your target, this EMA cannot be ignored. This is here to stop you. This is here as a double brick wall. This is here to catch you and hold you up as support. So although we have targets below it, we can't just solely rely on that. We need to take everything into consideration. Taking everything into consideration, we have the daily 55 EMA here, and that is what could potentially stop you from heading to 135. So those all well and all having these potential scenarios where we are going down to 120, and that is where you really personally want to buy in Quant. You can't just be like that. You have to move with the market. The market is always changing. Although at first and currently it is the target down here, 134, you might not reach there. Simply, Bitcoin formed a bullish cross on the daily time frame, which might break you above this, and then you might continue up. For example, if we close below, then yeah, we should continue down to this target, but this might not allow you. So yeah, going forward, we need to take that into consideration. Again, on the weekly time frame, we have this other EMA we need to be aware of, the 12 EMA. You could actually bounce off this in the short term. It doesn't always hold the best, as you can see in the past. Let's go here, back to the beginning. So here, can you see you were holding the 12, but you weren't actually pumping beyond the high after holding it, and you held it for another day, and you held it for another day, and then you lost it and you held the 20. So if we got rid of the 12, you can pretty much see it was just coming to the 20. However, sometimes you do follow the 12. Here we go. You weren't going to the 20, but you weren't getting that reaction of breaking the high. And then eventually you lost the 12, the 20, but you bounced off the 55. That's like our last layer of defense, the 55. So going forward, although you may get this long-term reaction from here, I'm personally going to wait for the 20. Yes, you might bounce from here, the 12 EMA. Look, the current prices for the EMAs are here. I'm not going to give you these as the prices because next week these prices will be different. So there's no point in me stating these numbers. But 130, 122 and 143, you can see the purple is the 20, the blue is the 12, the orange is the 55. So you don't want to lose the orange essentially at all. Otherwise that's a signal you're coming back down to the white one. But even if you were to do so, some awful scenario where that could happen, you could see the white line is above this low down here. So you're still technically bullish, even if you fall all the way down to here. That would be a generational buy, wouldn't it? I really don't assume that's going to happen. I really don't think that's going to happen. Only if you ever lose this and then these lows down here. Not going to happen, not going to happen. Not what should happen. What should happen is now we form this bullish cross. We need to confirm it to actually send us back to the all-time high, which is our target, guys. Remember, although this is what's stopping us in the short term to send us back down to this bullish cross, we're still in a target to the previous all-time high out of this inverse head and shoulders pattern. So by holding 83 in this part over here, you kept Quant bullish, sending you above 150. Now we need to confirm essentially this resistance as support in this area. We've got all the EMAs there. You might get the reaction off the 12. That could be a DCA point, but the bigger entry for me is going to be off the 20 EMA on the weekly time frame. We have that descending triangle, don't forget, but this 55 on the daily time frame might not allow it to reach. We just need to take it step by step. You see a daily candle close below that? Yes, we're going to meet the target. If you don't see a daily candle close below that, we're not going to meet the target. If we see a daily candle close above 1618, we're not going to meet the target. We're going to go up, okay? But this is still going to be a key resistance going forward. Thank you guys for watching. Let's get this video to 200 likes. Let's smash through 4,000 subscribers. And don't forget, I've got 50% off on my course at the moment over on Twitter, Louis_crypto. Thank you. I'll catch you in the next one. And as always, peace.